Flash estimates from the Urban Redevelopment Authority show a 0.8% rise in residential prices in the third quarter. Private home sales also hit an 11-month high in August. Analysts say that the current economic turmoil caused by the COVID pandemic may in fact be a boon for the property sector.
If you look at the stock market, if you look at the bonds, you put your money in fixed deposit. So if you look at the various options, there isn't really that many options to invest. And yet, I think there is a lot of liquidity in the market. So they have to find a place to invest. And real estate, if you take a much longer term view, and if one were to buy into a good location, I think most people will find that that is possibly a relatively attractive option.
Another factor is the low interest rate environment that we currently find ourselves in, thanks to the current policy measures of the US Federal Reserve.
You could get a housing loan today for around 1.5% or lower. And also there is a huge stock of HDB flats that is just turning 5 years in this year, 2020, as well as 2021. So about 50,000 units we estimate are reaching the MOP. So typically when flats reach the MOP is a good time to upgrade, because that's the time where you can get a good price for your HDB flats. Also, the other factor that's fueling demand is liquidity. If we remember in the last, from the period 2016 to 2018, en bloc sales fever, during that period, there is some $20 billion from en bloc money that are progressively finding its way back to the market.
So, given the current market conditions, is now a good time to buy a property? Analysts say that depends on whether one is buying for investment or for the purpose of living in the property. Either way, prudence is advised.
Supply is still plentiful at the moment. There is a lot of choice in the market. And so if you're in a position where you're able to buy a property, whether you're upgrading or you're buying your first property, now is the best time, actually. Developers are pricing very, very competitively because of the competition amongst one another. So they are not pushing prices up, even though they would love to. On the resale front, you find that actually sellers are very much more negotiable now, because some of them actually are selling to buy other properties.
But if you're buying for investment, I think one would have to think about the rental market, given that the state of the economy and it's likely to get worse. We do have to be mindful of the rental market, whether we are able to get the tenants in place to help service the loan, because even if it is even if the apartment is empty, we still have to pay the property tax, the maintenance fees, and the mortgage. You still have to service the mortgage. So I think one would have to think very carefully to build in the possible risks, including the risk of a mortgage rate increasing in the longer term.
Something else to bear in mind: the new restrictions on issuing an option to purchase, or OTP. An OTP is usually a 3-week period when a buyer books his right to purchase a property from a developer in return for a cash payment, which could be up to a hefty 5% of the purchase price. Experts say the new rules could lead to more accurate sales data, but it could also make property purchases more challenging for upgraders.
The HDB buyer would have to exercise the OTP to buy a property within 3 weeks. That means they have to sell the HDB within 3 weeks in order for us to not get hit by ABSD and to have the cash flow to be able to fund the exercise of the option. And this is not even counting that from the day that you actually sell your HDB, it will still take up to 4 to 8 weeks for the process to complete.
But some analysts feel that developers may actually welcome the move.
An option remains an option until it's exercised. So if the option is not exercised, it is not recognized as a sale. The developer cannot recognize the sale in the books. It is just for reporting purpose that the option has been issued, right? So therefore, actually developers don't like the idea of reissuing options. So to the buyer is what has changed is that you should only really buy when your timing is in order, when your funds are in order, because the developer is not allowed to make any more extension. All right, everything has to progress according to the sequential timeline.
One thing that has become more prevalent due to the pandemic is the idea of virtual property viewings. And this trend looks set to continue post-pandemic.
In a physical world viewing, you get a lot of information about the property, about surrounding and so on, but what you don't get is how do you visualize what it can become. In a simple case of a resale unit, having the floor plan on a 3D model of it, we should be able to help the customers envision what would this look like with a minimalist Japanese design, and what are the furnitures, or even down to the level of what would that furniture or renovation cost. Or it could be a fancy Renaissance, European style renovation, and what would that look like, what would that cost, and that's the kind of technology that we're building, and further allowing customers to even customize that outlook, so that when they buy, before they even buy, they would be able to envision what can I turn it into, and how much would it cost to do so.
Welcome to the virtual walkthrough of Treasure at Tampines.
In fact, narrated 4D virtual tours are a prominent part of the Singapore Property Show, being launched on October the 10th by 99.co in collaboration with Propnex and MediaCorp.